Hey guys, we're back with another episode of Venture with Joe and Cody. I'm Joe Skipper. This is Cody Wilhelm. I'm an agent. He's a lender
That's what we do.
with two different companies, EXP and Residential
Residential
Mortgage.
mortgage.
You know what? Did we talk about the Realty? There's something. Did I tell you about the Realty thing? Like
No.
the law in
I don't know.
Oregon? There's a law
Uh-uh.
in Oregon that's basically changing. I think it's going to get changed. So bear with me here. And I'm
Okay.
hopeful it will. But basically, okay, these views that I have are my own and my own only.
Okay.
They're not a representative of anyone.
Disclaimer.
But anyways, there's a law that's coming out or came out that basically is cutting any realty. You can't do a realty or realty group, or you can't name yourself that if you're under a brokerage. So EXP Realty can,
Yes.
but Skipper Realty Group. Did we talk about that?
Yeah, you had brought that
Yeah.
up to me.
Anyways, I just keep saying Skipper Realty Group, and then I'm like, oh man, I need to figure it
Right.
out. Like, because
Illegal. Fine.
I know. Well, I don't even know if it's illegal yet.
Okay.
But I do want to know the people that are like, hey, man, I'm just super confused. Like,
Right.
you're saying Skipper Realty Group, but like you're with EXP Realty. So I don't know like who I'm working with. Like,
right.
Can you explain that a little better? Because I don't know. I don't know as a client what I'm going to do if your name is this and you're under EXP
well,
Realty.
I mean, that seems like it would
Love
be
to
very,
meet those people.
It would be very impactful on your choice, right? Like,
yeah.
Well, if you were working I thought you were working for this company, but you're not.
I know.
Like,
I don't know the name of your company half the time, and I talk to you weekly. Because you can tell me I'm Cody Wilhelm Private Loans. I'd be like, okay, do not care.
Like, does it really make a difference if you're Skipper Realty Group or EXP or any of the other
it does.
options?
In the eyes of the Oregon law, it does.
Well,
anyways, I need to fix that. I need to fix it until hopefully they find a fix. But
you still got connections, right?
Yeah, that's true. That's true.
There you go.
I might use SRG, right? Just the short version. And people ask what it means, and I'll say I can't tell you. It's just SR, just the letters.
Legally, I cannot tell you.
Just the letters SRG. That's all it means. So,
but here's a buyer's agent agreement. Can you go ahead and sign this, please?
I chose these letters because they're my favorite letters. So
yeah.
Anyways, I wanted to talk today about we talked a little bit about on our live stream about this, but the new options that President Trump is giving us, and it's a hot topic and hot topics, not the store, but
not the store, but man, that was a hot place.
Remember Hot Topics?
Yeah.
Is it still around?
I couldn't tell you. I haven't been to a mall in a long time.
Don't tell me you don't know. You're like, I don't know.
Yes,
like,
that's where I got
maybe second floor, like.
Yeah. I think it's building like 107,
it's
but
right by Abercrombie where I go there. I think there's Spencer's and stuff, but Hot Topics was a similar, right?
Well,
is Spencer's and Hot Topics similar or no?
I don't really. I remember Hot Topic was like it had all the kind of unique stuff.
Yeah,
and I feel like Spencer's was Spencer's more gifts, like weird kind of gifts, and Hot Topic was like if you were into like emo metal, kind of like
was that Spencer's or Hot Topics?
I think that was Hot Topic.
Okay.
Yeah,
I know there is a store in there in the Washington Square Mall that has something, and I don't know if it's a Spencer's or Hot Topics. Yeah, it's where I go.
Yeah,
it's where I go to get all the gear.
That's all the Skipper Realty Group stuff.
My Pikachu shirts.
Your ears. Yeah. Little Pikachu ears.
Yes.
I did go into the Lego store at Washington Square Mall probably 10 years ago, and I did not realize how expensive Legos were when you buy them like that.
They're crazy.
Dude, and that was 10 years ago. I couldn't imagine what they are now.
Like you look for kids, like our kids are kind of growing out of it-ish, and it's like when you're looking for kids' birthday presents, it's like $70 for a standard just build a stupid whatever. It's like
that they build one time.
Like you end up having to get them like these little tiny, like the little tiny things that are like $25, and it's like it takes them 4 seconds to set up. But
I know
it's expensive.
It's expensive, and they put them together one time, and then they slowly get broken. Like our kid, like Zeke, he got a couple of them a few years ago, and it's like pieces of them get broken off, and then they just get mixed in with everything else, and before you know it, you're like, I'm never going to find all these pieces again to put this together.
Finding it again. Yeah. There's a place in Canby, I forgot what it's called. It's like a Lego resale type thing, and they have like boxes and bins and old Legos that people have turned in, and all that sort of stuff that you can get some sort of better deals. But I know that Christina, when Rory was younger, went there to find like a piece that you can't find, or
Yeah.
like that got lost, and you can go in there and try to find it.
Yeah.
Anyways,
That sounds
I don't
nice.
know what we're talking about today. We can just talk about going around the mall. Speaking of
Yeah.
that, though, like I did go around the mall just fairly recently. What did I go around for? Oh, sports.
Mm,
Had to get basketballs and all that stuff, so we went to Dick's in
yeah.
Washington Square. It's got
Okay.
more selection, so we went
Really?
to the mall, and then when we went there, we're like cruised around a little bit and walked around. They have the calendar islands, like for 2025 6, like where you can
Well,
look at all
yes.
the calendar. I love that stuff. Like,
Yes.
there's so many good calendars.
There's so many good. I've always for some reason loved that too.
Yeah, they're
Like
awesome.
picking out a cool calendar, even though
Yes,
I don't even. The
you
only
don't
time I
use
ever
it.
look at it is to realize, oh wait, I got to flip it the next month. I don't look at this at all. It's really just
I
for the
know. You
pictures.
just look for the pictures, but I guess I did that when I was younger too. But
Yeah.
what's funny about that is so Christina's parents did calendars primarily, like their marketing, and we should get you on the list so you can get a calendar from us.
Yeah.
But anyways,
Yes.
they
Family
retired,
calendar.
and they did one of their main marketing things was sending calendars of Oregon, and it was like one of those ones that had like your picture, like
Oh yeah.
your picture's
Like
there,
down at
but
the
you could
bottom.
flip over to different Oregon coast and all that stuff.
Uh-huh.
And when they left, they were like, "Hey, these calendars are pretty important to some of our clients." And I have to admit now, and hopefully they're not listening, or if they are, I apologize. That I was like, not gonna do that. Like, it's not gonna happen. But
Not my
I
thing.
had like there are multiple clients, and I'm not like there were multiple clients that called me directly that said, "Hey, I'm just checking on my calendar. Where
No
is it?"
way.
Yes. And we have clients that like, and they'd be fine me talking about them, but they're younger, they're fun, they're great. Like it's not like old people that like needed it. They were just like,
Yeah.
we use those calendars for all of our planning,
Like
and they're
we
like, please
actually
don't
count
stop the
on those.
calendars. So yeah. So anyways, we still send calendars. We
That's
kind of thought
awesome.
we're like, do we do it with our younger crowd? Like, do we do it with our crowd? I
Yeah.
was like, I don't know if our crowd would be like, what are you sending me
Right.
this calendar for of the Oregon picturesque like
Uh-huh.
places? But people love it. Like
You
people
know?
like it's been a great, like her mom said she got, 3 or 4 clients just from that. Like just from each
Really?
year sending them out. So
Huh?
anyways,
I mean, I
maybe me
gotta
and you
figure
need it
that
done.
maybe we
Like you
do.
and I could do you
Yes.
it could not like be the picture. Like I
Well,
don't
we
think
could do
that's gonna
that.
we
I
could
mean,
do
if
that,
we
but I don't know if that's gonna be appropriate for anyone, including
yeah,
ourselves. Like I don't even think we get our wives to buy those things. They're like,
I
"Yeah,
can
no,
guarantee
I'm
that
good."
they wouldn't,
But
which is
we
what means
could
that they would be great.
But we could do, yeah, we could do pocket calendars, Cody and Joe pocket
Yeah.
calendars
Yeah.
with
I'll be
our little
like, you
mugs
know
on
what? Let
there.
me see. What
Yeah.
do I have on my
Yeah.
calendar
What do
today?
I got today? What do
There's
I got
Joe. There's
today?
Cody. Okay.
Cody, there they are. I need a loan and I need to buy a house.
Yes.
That's what I need to do.
I
Anyways,
love
yeah,
that.
back to calendars. But the more important topic is the hot topic in the lending world that President Trump gave to everyone,
Yeah.
which was the 50-year mortgage.
Yeah.
And the transfer mortgage or transferable mortgage or whatever it is. But start with the 50-year mortgage. If you just want to go over kind of what the hot topic is, what they're pitching, and what he thought would be a good idea to help buyers out there today.
Yeah. So there's been a lot of push, as everybody probably knows, on bringing rates down, mortgage rates specifically, bringing those down. And they've come down a little bit, but there's just been this big push recently where a 50-year mortgage has been thrown out there. I don't know exactly if it's just something to kind of put out there, but I did run some numbers on it just to kind of see like what would it look like. And without knowing what the interest rate would look like on a 50-year, it's kind of hard to really know, but I would assume that it's going to be higher than a 30-year. But if that were the case, it's, you might save couple $100 a month. If you've got a really big loan, you might be saving $400 or $500 a month. But for the average person, $400,000 loan, which is about an average loan size around Portland metro area,
Yeah.
you're looking at saving probably a couple $100 a month. But your interest that you're paying over the life of the loan is significantly higher because you're adding 20 more years on the term. So I get the idea of wanting to put some more options out there to make it cheaper, but I think if it was used, it would be used as a short-term
Yeah.
way to get into something. Sometimes, I mean, realistically, it could be even a matter of qualifying for a house, right? And not necessarily qualifying in like, I can barely afford this house, but say a situation where, we could count one person's income, but the spouse, maybe they haven't been at their job long enough or something. And so we're only counting one income. So by being able to bring the payment down a couple $100, maybe that one person is able to qualify on their own.
Yeah.
And then in 6 months, when the spouse has been at their job long enough, they could refinance. that's where I could see it kind of making sense, is just having that option. But you still have that same option essentially with buying the rate down.
Yeah.
So, you can knock off a couple $100 by buying the rate down. So to me, I think, I'm sure that there could be some use for it. I could probably find a handful of reasons why it would be good for some people. But I think overall, I don't know that it really fixes or really helps a lot of people in general with it, because it's just, I think when you look at it, especially if you're actually looking at the numbers, everybody assumes that they're going to be in the same house and keep the same mortgage forever.
Yeah.
It's
Yeah.
not always the
Not going to
case.
happen. Yeah.
Yeah, rarely does it happen. But when you look
Yeah.
at that number and you're like, I'm buying a $500,000
Yeah.
house,
I'm going to pay
and
$500,000. Yeah.
yes, and
And
I'm gonna
interest.
yeah, exactly. 50 years, I'm gonna have paid 1.5 million for
Yeah.
this home.
Yeah.
Like, that's
For
a
sure.
tough pill to swallow. But
Yeah.
the reality is, you're probably only going to be in any given loan for 5 to 10 years, if that. So
Yeah. I think that it doesn't provide anything different than what you could do now. I think that,
yeah,
like you said, it's like, buyers are more than ever, or more than the last few recent years, been able to ask sellers for closing cost credit or to buy down rates.
totally.
Sellers have been doing it. So if you're like, hey, $200 will get me into a home, if I could save $200, like, then you should probably talk to your lender and your agent, because it's the only difference between that $200 is like you could mess with the interest rate at that point.
Yeah,
So I just don't think it's a necessary thing in that case. If it was like, it's going to save you $1,000 a month by doing this, then yes, it would be a deal breaker. It would open up the buying world
totally. Yes.
to everyone. Or if it's 100-year mortgage and it's
Yes.
like you save $1,000 a month because it's over 100 years,
Yeah.
then you see a difference. But yeah, right now, $200-300 over an average loan,
Mhm.
you can ask your agent to ask for it in closing cost credit and buy down a
Yeah.
rate, to get
Right.
$200-300. So
Yeah.
yeah, I don't see much of it, but it's not serious right now, right? It's like there's a lot that would
No.
have to go on. It's not just like a stroke of a pen and you guys can just, start offering 50-year mortgages. It would be
Yeah.
quite a bit more elaborate process to kind of get those going, but it's just a dream right now, right? Or
Totally. Yeah.
fairy tale.
Yeah, I think it would take, I don't know how long, so I wouldn't even throw out an idea, but I think it would take a little bit of time to get that in motion, getting every lender the option to it, because they could say, hey, cool, we can now do 5 or 50-year mortgages, but then everybody's got to get used to it. It's not just like oh, cool, we have this option now. Like, there's a
For
lot
sure.
that goes into rolling out stuff like that, but you never know. Maybe they could turn it around and make it an option in 3 or 4 months, and it's something that we're looking at. And yeah, it's just like an an adjustable rate mortgage for people, or any of these other options where it's, some people, they are comfortable with it and they want to go with it. But probably for the majority of people, they're going to want to just try to stick with a 30-year. Um,
Do you
and
stay? Are you seeing ARMs a lot now or no?
no, not really. We were seeing them there for a while, 2022, 23, when rates had really started to go up, and it was kind of that shock. There were more people that were interested in ARMs. And the ARM rates were actually quite a bit better than the 30-year
Yeah.
fixed rates. So it was kind of a no-brainer, because it's like a lot of ARMs are 5-7 year ARMs. You can do shorter term ones, but yeah, there were definitely a lot more people doing them. Now I don't really see it nearly as much, because as rates start going down, there's a little more security in that, rather than like, oh man, maybe we'll just try to get it into an ARM and get it at
Yeah.
4% instead of taking 5.5%. And it was such a shock at that time that I think it was like, this is what we have to do in order to make it work, because the rates have gone up so much. Now it's like everything's leveled out, and I feel like you get some people that either have experience with ARMs, or they just know that they're only going to be there for 2 years. It's like a total stepping
It's like,
stone.
this is
Like,
just,
we'll be
this
out
is
of here
temporary for
before we're
sure.
even close to needing to do
For
anything.
sure. We did an ARM when we first got our first townhouse, and
Oh,
I
yeah?
remember coming up. We used it. Like
Uh-huh.
we like used it until it was like, okay, we gotta figure out how to lock this thing in, because
Sure.
yeah, we used it our whole time, because I think at our point, you don't have a lot of money and you're just buying your first place, and
Yeah,
The
get the
rate was,
cheapest you
like,
can.
way better. Yeah, it was the cheapest rate we could get, but I remember
Uh-huh.
specifically being like, "We it's already passed." I think, I don't know, 5 or 7 years? I don't know what they normally are.
Okay. Yeah.
But, yeah, it was, I remember that, the good old
Well,
days.
and sometimes it can work in your favor. Like
Yeah,
if rates are going down, then your rate will go down with it.
for sure, for sure.
So if you can
I think we
time it
did come
right,
out
like,
pretty well. I think we did find it
uh,
either equal to or less than, at the time, but we kinda, like, were at that point where we had to start monitoring, like, "Here we
right.
go,"
Yeah.
So we've
The Fed
enjoyed that low
decision
rate
really
for
makes
this,
an impact.
yeah, so anyways, well, the other
Yeah.
one is for lack of a better term, it's transferable. I should look it up. Is it
Yeah.
transferable mortgage or a mortgage that basically the mortgage rate would come with you if you were to move
Yeah.
houses?
Yeah, I think I
What's your
heard
thoughts
it
on
called like
that?
a traveling mortgage or
Oh, yeah, that makes
transferable,
sense.
something
Yeah.
like that. But yeah, the way that I've seen it proposed or the idea behind it is that you can take your current mortgage
Portable
with
mortgage.
you. Portable mortgage.
Yeah.
Okay. So
Yes.
you can take your mortgage with you to your next property. Whereas right now, the way that mortgages work is they are fixed and set to your property. So you can't just like transfer
Yeah.
it. And so this idea would be that you can transfer your mortgage to the new property. And then I'm assuming you would need to come up with some second loan to make up the difference. Like if you're buying a $500,000 house, your current mortgage is 300,000 at 3%.
Yeah,
You
yeah.
take that, you apply it to the new place. Now you got to come up with, whatever the criteria might be, another $150,000 in a second loan. But that's the whole idea, is that you could just kind of transfer it along with you. Like that's just your mortgage, and you get to just put that in your pocket and keep it
Yeah.
forever on whatever property you want to apply it to. So, I mean, overall, it would probably keep the interest cost down, because if you're able to keep a mortgage, even if it's not your full mortgage, at say 3%, then that's going to be a lot cheaper, right? On
Yeah,
that one,
yeah.
you might take a higher rate on the other one, but overall, I don't know that that one will really get any traction personally, because to me that feels like the big financing industry would be losing out on a lot of potential when
Yeah.
it comes to interest. I mean, it would be a benefit to the consumer, but that's why I
Yeah.
don't know that any banks would take that on,
It wants
because
to do it. Yeah, for
yeah,
sure. Well, it's
they're
interesting
all
is
hoping for a refi.
I know. I just looked it up on Google, and it basically says they do have it in Canada and the United Kingdom, but it's only being
Oh,
evaluated in
really?
the United States. But
Oh,
I can
okay.
tell you the United Kingdom is a whole different beast with homes, so it's a
I bet.
whole different world. But it does say, like, for a more expensive home, you'd need to cover the difference with cash or a second loan.
Okay.
Yeah, so the limitations in
Yeah.
the US is we normally rely on a long-term fixed rate, which makes widespread implementation difficult due to potential disruptions to the mortgage-backed securities market. Yeah, so both of those will take some time. I like the second one just because I think that would obviously, again, this wouldn't be immediate. Banks would have to figure it out, lenders would have to figure it out, but I think that one makes more sense to people to
Yes.
say, "Hey, this is my mortgage at 3%. I'll pay an extra 150,000 for the next house at 7% or whatever it is, but, much better than paying 6%, 7% on 700,000 or 600."
Totally.
So,
And
yeah, it's an
and
interesting one.
yeah, and when you think about it, and this is just kind of basic consumer thinking, and I'm saying that from myself, it would make sense that you could take your mortgage with you,
Yeah,
right?
yeah,
Like,
for
hey,
sure.
I'm already making this payment. I'm already
Yeah,
qualified for this,
you can
everything.
just
Why
bring it
can't I
over here
just
and don't
transfer it to
change
this
anything.
one?
Yeah, yeah.
Yeah. And if
But
I'm downsizing,
I think there's so much selling and buying of loans, like,
oh yeah,
it's like, where is it? Like, where is it in the who owns it, who has it, and
yeah,
coordinating with that person to say, "It's now on this house, and
uh-huh,
this other bank has the rest of it." It could get confusing, and I'm not saying you shouldn't try it, but it would be kind of a logistical nightmare at this point unless someone could figure it
oh
out
yeah.
to make it easier.
Well, it's like assumable loans right now.
Yeah, true.
There have been people that are doing assumable loans,
Yeah,
and
that's
that
true.
process is a big pain for the person that's trying to qualify for that assumable loan, because they got to go through this. They can't go through whoever they want for the financing. They have to go through the lender that currently holds that mortgage, and then they have to qualify through them, and they have to jump through all the hoops, and
Yeah,
it's just a time consuming thing. Like in the end, it's well worth it, especially if you can get something that's
if
in
you can
the
get it,
two,
yeah,
three, fours, but they sure don't make it very easy from what it
for
sounds
sure.
like. So
So can you do this is just me thinking out loud. If I, okay, let's use an example. $500,000 mortgage. 250 of it is assumable at 3%. I need to make up the $250,000 difference. Are different lenders saying, "Hey, I'm going to assume this part. Can you lend me the extra 250,000?" Or is that something that lender, that assumable lender, has to do? Or is that something that like Cody can do, the 250, and I can assume the other 250?
Yeah, there are certain, from what I've understood, there are certain banks, institutions that will provide that second loan for an
Okay.
assumable.
Okay.
So not all places will. I actually had recently looked into that, and we don't currently offer that solution, but I know there's places that can, because most places you're going to have to come up with
Yeah.
some
And most people think cash or
funds, and it's
something,
not.
but yeah.
Yeah, yeah, so there's definitely ways that you can. I'm not sure what the best route is, mainly just because I haven't really come across. I haven't had anybody reach out to me saying, "Hey, I want to assume this
Yeah.
loan."
Yeah. Yeah.
So I haven't really dove into it a whole lot, but I do know that there are options to be able to get that amount in that second loan if you don't have the cash to do so.
I thought that'd be more common. I thought it was
You would
gonna
think
happen,
so.
and I just haven't experienced it a ton. You find a lot of investors that are looking at places that we've had
Uh-huh.
listed, or buyer investors that were like, "Hey, let's look at if it's assumable or not." But
Yeah,
you just think it'd be more common,
you would think so. I mean, that's
like
a
especially
for
with those rates, to say, "Hey, I'll come in and I'll assume your 2.75% rate and
yeah.
figure out the other," you know. So
And I
interesting.
wonder too how much of it is like the process just not being a smooth,
Yeah,
easy
true.
process can potentially just kind of like get people to go, you know what? I no, I don't want to go
It's not
through all
worth it.
this. I don't want to
Yeah,
keep going. I'll just do my own thing and figure
yeah,
it out.
true,
Because I feel
true.
like if they made it easy, it would make way more sense for people, right? But it's like people that I've talked to that have gone through it, or other lenders that I know that have been working through it. It's like a 90-day process just to
Just
get
to do it. Yeah,
everything
for sure.
approved, and so
Yeah. Yeah, I don't know. It's interesting
it
that we
is.
don't see it more often.
No, you'd think so for
Yeah,
how much rates have been an impact.
yeah.
I don't know.
Um, what's your thoughts on them being implemented? Do you think they're kind of pipe dreams right
I
now?
I think so. I think
Yeah,
they're just ideas to be thrown out there. I think
yeah,
that, Trump's really making a push for lowering the cost for mortgages. So throwing these out there, I think it's good conversation to have, and good throwing things out there, right? Like, let's
yeah,
figure something out. If
for
rates
sure.
can't come down, then what's our next best option? So I do like that there's things being thrown out there, because it doesn't feel like there's big changes that happen in the mortgage industry very often. So to have some potential changes would be kind of nice in a way. I don't know if they will. I think if rates start to come down here over the next 6 months or so, then I think that's gonna kind of reduce the need for some of those things. But I love the idea of just trying to get a little more creative. The mortgage industry, to me, it feels like it's like an old archaic kind of thing, and it's like, well, let's not change anything because it's just worked like this, right? Which is good. I mean, don't go back to what kind of ruined the whole economy by any
Yeah,
means, but it also doesn't
it's
have to
not
just
nimble
be
by
like,
any stretch.
it's not, no, and
It's
everything's
a
so
giant machine
slow.
that is like, I feel like it's like a Star Wars, like a huge, just
Yes,
giant that just cannot move. Like if you
it's
move it,
so
it's gonna
bad.
take a long time to move it. But
Yeah,
similar to the real estate agents, or real estate side of things too. It's just an old system, and it's hard to get people to change it, you know.
uh-huh. And I
Yeah.
understand it. You're talking about hundreds of
These are
thousands of dollars,
billions,
if
and
not
yeah,
millions of
yes,
dollars that are
in the
happening.
system that's happening. Yes, for sure.
Yeah, so it's not like you
Um,
can just kind of treat it like a personal
Try
loan of
something
like,
out and then see what happens, you know.
yeah,
Try a system and, "Oh, that
right.
sucked. We lost millions of dollars, doing this." But
Yeah.
yeah, well,
I
at
don't
least
know.
someone's talking about it, seeing if there's things to, because all of that stuff could be part of, I think you mentioned it in the live stream, is like it could be part of the programs. It's like maybe it
Totally.
doesn't work for 90% of the people to do a 50-year mortgage, but maybe it does for someone that's like, "Yeah, for me, I'm not doing 50 years of this house. I
Mhm.
just need an
Yeah.
affordable payment that I can get my, do whatever I'm doing, flip it, or whatever you had in
Yeah.
mind, and then you sell it again."
Yeah.
It's nice to have the more options I think you have for people. No one fits in a the same box, and so
Right.
I think having the
Yeah.
multiple options is just a good thing.
It is. And I don't, I feel like I can, having this conversation, I can convince myself one way or the other of whether or not I like the idea of it.
For
But I
sure.
don't really see any reason why it shouldn't be there. We have 15-year mortgages and 20-year mortgages
Yeah.
that get used like 1%, like hardly anybody uses those in comparison to the big picture number of 30 years. So it's like we continue to keep those options available.
Even
And
though
I
they're
think
not
once it's
utilized. Yeah,
yeah, I think once it's implemented, then it's just part of the portfolio of you can do a 15, a 20, a
for
30.
sure. For sure.
I think it would make sense to throw in a 40 at that point. Throw in a
Mhm.
40 and throw in a 50, and then it's like,
Yeah.
okay, you have all these different terms. Pick which one feels the best for you, or which one works. I mean, it does feel a little bit kind of like when I signed up for our timeshare,
Oh, yeah, yeah.
where it's like, well, what do you think you can afford each month?
Yeah,
Uh,
exactly.
and they're like, okay, this one will
That's
fit
what
good
it
for
is.
you.
Like, that's
It
honestly what
is
it is. It's like, whether we like it or not, we, again, said it on our live stream, it's like people go with the monthly payment.
totally.
They don't care. So, we have these experts come on and like 50-year mortgage, you're gonna pay 3, 4, 5 times the amount of the house. Just it's like, bro, no one stays in a house for 50 years. Like,
Yes.
I know you think that that's the worst, and that is a worst case scenario, but that never happens.
Huh?
Like, people
Yeah.
move every 5 to 7 years, whether they have a 15-year mortgage, a 20-year mortgage, or a 90-year mortgage. It does not
Yeah.
matter. Like, so home affordability only depends on, how much their outgo is monthly for the mortgage.
Totally.
So I just don't see that argument kind of holding that, what I've
No.
heard is like, "Oh, look how much interest you pay over this time." It's like, yes, it's a
Uh-huh.
great point. But
Right.
name me one person that stayed in their house for 50 years. Like
Yeah.
Christina's family maybe are close. They've been 30 something, maybe 40 something. So
Okay. Yeah. But
that's
I feel
that's
like
rare.
that's yes, and I feel like that also changes with the generations too.
Yes. Yes.
Like our parents' side, it was like you get that place and you're just like
That's
you're
your place.
happy
Yep.
and you're gonna maybe move once you're just too old to maintain the property or
Yeah.
there's stairs or something,
Yep.
right? Now
Yep.
I feel like it's more of a I don't really like this,
Yeah.
this the whatever it is, I don't really care. Let's see about moving, right? And like you think about even 10 years. 10 years with kids are out of the
For
house,
sure. It
your
changes everything.
age, like 10 years is a long time for things to change to where it's like, you're in the middle of having kids and everything going on and 10 years later it's like kids are gone. We don't need all this
For sure.
space anymore. We had the whole reason we got this place was for the kids
For sure.
and now like I just think yeah, to your
Yeah.
point,
People are just
I
more
think
mobile.
people are just going to go, all right, well, we don't need this two-story home anymore even though we're only 55. What's the point? We don't need
What's the
this.
point? Yep.
Let's
So,
let's
yeah,
move
the
into
length of the
something.
term is not the big deal. And whether
No.
they're right or wrong financially, you could have Dave Ramsey all over us saying, you
Yeah.
pay cash for a house, but it's like,
Right. Yeah.
it's
I would
not
love to.
it's not in the cards. So people are
Yes.
like, I can afford $2,000 a month on a mortgage. It can be a 950-year mortgage as long as it's $2,000 a
Yes.
month. I don't
Right.
care because I'm
Yes.
not staying for 9,000 something years. So,
Well, and
yeah.
that puts you exactly where things were at when the rates were low, right?
Yeah.
Like how many
Yeah.
people, including myself,
Oh,
bought
yeah.
a house that was more expensive than what I would
Than
have
they ever
paid,
thought they could do,
but it
but their
doesn't matter
monthly
because
mortgage
the
was the same.
exactly. The payment lined up and it's like, wow, we would have never spent this much, but because of where rates are, we can afford this on a monthly
For sure.
basis and,
For
why
sure.
not? So, I think
Try
it
things,
yeah.
I guess. Yeah.
Yeah. So we'll see. I'd love to see some changes happen in the industry. I mean, we could just bring rates down. That would probably work,
I know
but
that
I
would
love
solve
the
the issue.
creativity.
Very, very simple to just lower rates, but yeah, I don't
Yeah.
know. It's an interesting that stuff is like we could get into a whole other topic about interest rates. It's like, yeah, it's just funny how, interest rate really is like how much you're paying the bank to loan you money. It's like, does the bank, then you get into this whole, does the bank need that much money? Like, do they
Right.
need that much to loan? But they also
Huh?
make a lot of risk to
Totally.
people to give them that money. So, but it's all
Yep.
imaginary money anyway. Like
It's all just play money.
we're talking about $1,000,000. Like, oh yeah, the bank has it and lending me. No, the bank just said in an email that they'll lend the money. It doesn't
Yes,
go anywhere.
exactly.
And then
They're just
then the,
trading it
then the
around
homeowner
like
got $1,000,000. Do they have it? No, it's just in their
yeah.
bank. Like it's all imaginary.
Right.
But anyways, we can get into that topic too, but we're not going to.
Yes.
Well, it was good talking to you, man. Thank you for
Hey,
the
you too.
info. And
Yeah.
until next time, we will see you later.
We'll see ya.
Okay. Bye.
See ya.